You know, it's all forgotten. It's all forgotten now that, you know, we can see the reception on the JSE, and, you know, it's really tremendous. I mean, I think, you know, we're very, very humbled by the interest in Sygnia because it's completely unexpected. You know, we're a small cap company with a small float, and we really thought we will come to the market relatively quietly. And it has turned into a bit of a circus, I have to say, but, you know, it's extremely rewarding to see. You know, by far. I mean, we thought, you know, we offered the share at a very reasonable valuation of kind of just under 15 PE historically to the end of September. And we thought, you know, that was a fair price. But this is beyond anyone's expectations. And I think, you know, we, as I said, very, very excited and very humbled by this. And it also does represent a bit of a new chapter in Sygnia's evolution, because it does allow us to think bigger. So if the reception is as welcoming as it has been, and, you know, if we can raise the capital that we can, you know, visibly raise, then really sky is the limit in terms of what we can achieve. We don't know yet. I think that predominantly we targeted this listing at retail. But, you know, in terms of institutions, we had over 61 institutions coming in, and institutions being either asset managers or stockbroking houses or private wealth managers, hedge funds. So it's very difficult. We haven't had the look through to the stockbrokers that came to us as institutions, but obviously they did so on behalf of numerous clients. So, you know, altogether the float is 22.3% of the company, but we will see from the shareholder register after today how many new shareholders and what the actual split is. I think we probably would have considered those allocations a little bit more carefully. You know, I think this market is very used to the fact that when allocating shares, everyone does it on a proportional basis, whereas, you know, with a 20% oversubscription, we were, you know, we just thought if we did it on a proportional basis, the amounts that we would allocate would be so insignificant that they would just be an admin headache for people. But with hindsight, we probably would have done those allocations differently. I know I would have tweaked those allocations, and, you know, but we just never ever expected this level of support and this level of interest. And so, you know, we kind of did it a little bit haphazardly, but, you know, we did up the best we could under the circumstances. Well, we've got some exciting things we want to do. One of them is the launch of robo-advisors, and linked to index tracking products at, you know, very low cost. So we want to see whether this concept of direct investing really has traction in South Africa. And that's coming around February. And then a little bit later in the first half of the year, we want to launch an umbrella fund, which is kind of stripped of all costs, all complexity, very much in line with what National Treasury is saying in their draft default regulation paper. And we want to see whether it can be done. So we're hoping to launch the umbrella fund, take on some of the big guys, and do it at as low a cost as we possibly can. So that's the plan for the next 6 to 12 months. Other than that, look at international expansion, do some research, get our ducks in a row. And other than that, sell index tracking products and get our brand out there.